Greetings, fellow traders. Hope you're having a wonderful new year and looking forward to have a wonderful 2021 as we kick 2020 down the curb. I wanted to share a new tool offered by the Sabre Trading Group, our group of traders that meets every Monday, Wednesday, and Friday, on finding Forex opportunities in the market. Now, unlike futures and stocks, you do not need to know particular strength or weakness of any particular product. For instance, what is IBM going to do today? Or what is Tesla going to do today? Or what is crude oil going to do today? We have no idea. We know the sentiment of the markets drive prices down or drive prices up based on individual trader behavior. But Forex gives us one advantage. We can see statistically how strong or how weak particular currencies are against one another. So on this particular page, we have the Swiss franc and the Japanese yen. You can look at the US dollar and the Japanese yen. You can look at the euro and the Japanese yen. And how any one particular asset, in this case the Japanese yen, is behaving against all the other relative currencies. You can tell overall the general health or the general strength of any particular currencies. So on this chart, we see 6 different time frames. We've got a 5-minute time frame, a 15-minute time frame, a 1-hour time frame, and so on, going to the 4-hour, the daily, and the weekly. And what that lets us see is the relative strength of that product over different time frames against that asset. But what happens when you get to take a particular asset and you compare it against everybody else? And that lets you see trading opportunities as to what currencies are strong right now on a particular time frame relative to all of the other currencies, and where are these currencies weak on any particular time frame against a particular batch of other currencies. So what we have here, our tool that we're going to share today, is our currency, what we call the Sabre Trading Group Forex RSI TradeFinder. And when you can see that you have a group of strong assets and you can pair them up with a group of weak assets, you can go long or you can go short based on how those pairs are laid out in the market. So you would go long, say in this particular example, on the CAD Swiss, or go short, for example, in this particular asset here, on the euro dollar. And so we got to find out where the strong pairs are on each particular time frame, and where the weak ones are on each particular time frame, and those will give us the highest probability zones. And how we find that out is in terms of our system of trading. We call it trade like a pirate, and we look at location, formation, and destination. Where in the weather patterns are we looking to set our boat? We want to go with the tide, we want to go with the wind, and when all the weather conditions are right, now we're going to set sail. So in each of these boats, basically you create a boat for the US dollar, the HMS Euro, the SS British Pound, the HMS New Zealand. And you're creating all these little boats, and you're seeing how fast or how slow they are compared to the other boats. And in a sense, it's kind of like going to a racetrack or like a horse betting racetrack, where you're going to see that these horses have a high probability. Oh, they're 10 to 1 that they're going to win. 5 to 1 that they're going to come in first. And then you have other horses which are very weak. In this case, look, the euro is very weak compared to, say, the British pound, which is very strong right now, all these green numbers. And you're going to say, I'm going to bet against the euro. That euro man, he's like 50 to 1 that he's going to come in last. Or the British pound, he's 2 to 1 that he's going to come in first. So trading is all about a game of probabilities, just like a casino. Except we don't want to be the one at the table playing poker. We want to be the casino. We want to be the dealer behind the table playing poker. And that's what puts the odds in our favor, to see where the strong boats are and where the weak boats are, in this case the fast ships and the slow ships. And we're only going to play the ones that come in our favor. So when you think about being able to pair 8 different currency pairs, and here are the major currency pairs we have here: the Aussie, the CAD, the Swiss, the euro, the pound, yen, Zealand, and the US dollar. They're the big boys, and we don't want to play in the dirt, as one of my friends likes to say. We're not going to be playing with mom and pop kind of here's a little guy that just brought his horse to the racetrack, or here's the pirate, and all he's got is a little dinghy. I want some guy with a big, strong ship with cannons blazing, right? And strong, good sails, solid oars. And so we're playing with the big boys over here. And what this does is it lets us pair these 8 currencies against one another. So each particular day, we potentially have, we can see we got 1, 2, 3, 4, 5, 6, 7. We got 28, 7, 14, 28 potential trading opportunities. And when we find out what the strength is relative to one another, we can find the 9 highest probability trades that we can take every day, whether they're long or short. So on the 5-minute time frame here, we can see for longs we have 1, 2, 3, 4 long opportunities, and 1, 2, 3, 4, 5 short opportunities. On the 15-minute chart, we've got 5 long opportunities and 4 shorting opportunities. On the 1-hour charts, 1, 2, 3, 4, 5, 6 long opportunities and 3 shorting opportunities. And what these little flags here tell us is that they are surrounded on the top and bottom, on the upper time frame and the lower time frame, by a similar result. Where here, the Euro Aussie dollar has a flag. Well, what's happening is, not only is the Euro Aussie weak, meaning we should short this asset on the 1-hour chart, it's also weak on the 15-minute right above it, and it's also weak right below on the 4-hour chart in terms of above it, in terms of the time frame, but below it here on the spreadsheet. So not only is this trade in our favor, but it's really in our favor because it's surrounded almost like bodyguards, almost like those big thugs that you'll have some like a mafia boss come down the street and he's got these 2 thugs next to him. That mafia boss is going to get to his destination. This Euro Aussie, it's going short, and it's going short hard because he's surrounded by his bodyguards. So that pops up every now and then, which is why we have everything from the 5-minute down to the weekly charts. Because if you want to trade the daily, you want to see what's going on in the 4-hour and the weekly. If you trade the 1-hour chart, you want to see what's going on in the 15-minute and the 4-hour. All right. Now, how do we populate this chart to get this information every day? All right. So every day that we trade, we wake up in the morning, and it literally takes less than 5 minutes per day to fill out the relative strengths, whether one of these assets is strong, where we write in an S, or one of these products is weak, where we put in a W, relative to each different asset. So in the dollar boat, in the US dollar boat, we're going to compare it to the euro, to the pound, to the Aussie, to the yen, to the Zealand dollar, to the Cad dollar, to the Swiss. All right. And so what we do is we're going to add in or type in whether it's weak or strong in relation to that particular product. All right. Now we only need to type in the assets that are beige, because the assets that are not beige, that are gray, they're going to be typed in elsewhere. Because basically, if the US yen is strong on the 5-minute chart, that automatically means that the US yen on the yen boat, if we go down to the yen boat and we compare it to the USD, it's going to automatically be weak. So the spreadsheet types in 50% of the information for you. So we only need to fill in half of the fields because it's going to be relative to the others. So if the US CAD right here is weak on the 5-minute, when we go to the CAD, we see the US CAD is strong on the 5-minute in the CAD boat. The CAD is the stronger of those 2 assets. So in the CAD boat, it's going to be strong, and in the US boat, it's going to be weak. All right? And all that plays off to give us a final score. So on the 5-minute chart, when you look at whether the dollar is strong or weak against all the other assets, you just add up where it's strong. So we had the US dollar being stronger against the euro, stronger against the Aussie, stronger against the yen, stronger against the Zealand, stronger against the Swiss. So it scores a 5 on the 5-minute chart. And anything in green is what scores 5 or above on this particular aspect of the spreadsheet here. And anything that's red is weak on that chart, basically something that scores less than a 3. And when we fill in all of this data here on the left, this little spreadsheet here tells us where the strong pairs and where the weak pairs are relative to each other on each different time frame. And then this part of the spreadsheet automatically, or as I like to say, automagically, tells us on each time frame where the short opportunities are and where the long opportunities are, and then where those opportunities where they're surrounded by bodyguards are. So here you have the pound Swiss and the pound euro and the pound Zealand on the 5-minute chart. And so we basically going to see the pound Swiss, we set that right here as going long. We see the pound euro. And the euro, basically, since the euro is the front part of it's the base unit of currency, the euro pound, we're going to short it because it's the euro pound. And so compared to the euro scored a 1 in this instance, and the pound scored a 7. So we're going to want to short that euro when it comes to the euro pound. And so that's how we figure all of that out. So how do we populate this part of the spreadsheet? We populate this part of the spreadsheet by creating a workspace in TradingView, or whatever your platform of choice happens to be. And what you want to do is create 6 different chart screens, all with the different time frames: the 5-minute, the 15-minute, the 1 hour, the 4 hour, the daily, and the the weekly. And that'll let us find trading opportunities on every single time frame, or each one of those 6 time frames out there. So no matter if you're a scalper and you want to trade the 5-minute chart, or a day trader and you're trading the 15-minute chart, a day or swing trader getting the 1 hour chart, a definite swing trader, your 4 hour charts, and so on. We're going to fill in all this information. Now the key to finding out if it's strong or weak is we need to put an indicator on each of our charts here. And that's going to be the 200 moving average. All right, so basically the last 200 candles, you're going to find the moving average. So the 200 moving candles, last candles on the 5-minute chart, the last 200 candles on the 15-minute chart, and so on. And what we have in the spreadsheet, if you so desire to purchase it, is going to have all those instructions on the back showing you how to do this in TradingView, how to set up your worksheets, basically going to the symbol and synchronizing your symbol across all the platform, all the different time frames, adding the 200 period moving average to all those charts, saving it as a layout, importing or adding all of these symbols, which are the symbols that we need to track each day, into a watch list. And then you're going to go symbol by symbol down there, marking them and updating the spreadsheet for each one of those. And then boom, we're going to get our flags and arrows telling us where our opportunities are. Okay? And the great thing about this spreadsheet, there are some calculators, there are some programs, there are some apps that do this for you, but you don't know how they come up with their calculations. It's one of those black box kind of things. And what's great about this system is you know exactly how this information is formulated. We're looking at the relative strength of each asset based on its 200-day moving average for each of those pairs. How strong is the euro-yen in this instance on the 5-minute, the 15-minute, the 1 hour, and so on, okay? And so if you wanted to change it and tweak it and whatever, you can change it to the 100 moving average. You can change it to the 50 moving average. You can use RSI. You have total control over how you're going to determine whether this asset is a strong asset or not. So when you go ahead and add this 200 moving average to one chart on TradingView, you can simply right-click on it and then say add this indicator to the entire layout. It'll automatically add it to all 6 of your layouts. And this is the layout button up here. And so we want to synchronize our symbol so that we're going to choose our 6 different symbols. We're going to synchronize our symbol across each of those different time frames. And every time we select a new symbol, it's going to automatically set these up for us. So we're going to see where the relative strength is. Okay. So what we're going to do is say in this case on the euro pound, we see that the price is currently below the moving average, so this is considered weak. This is also below the moving average, so it's considered weak. Price on the 1 hour is below the moving average, so it's weak. This is weak, this is weak. But on the weekly chart, the price is actually strong, okay? So what we're going to do is just walk through a couple of those cells and show you how you do this. So in the US yen, that would be the first cell that we can type in because all these cells are grayed out They're going to get that data from the other parts of the spreadsheet. So we're going to see what these 6 time framed strengths are on the US yen. All right, so we're going to go back to our spreadsheet and go to the US yen, and we're just going to go straight down this entire list one by one. And like I said, it takes less than 5 minutes every morning when you turn on your trading computer and you want to get ready to go and just get some ideas of where you are in the market. So here we are at the US yen. So if we go through the 6 different assets here and where they are relative to each other on the 200 moving average, here we have a strong, a weak, and then the weak, weak, weak. And so that's where we would type in strong, weak, 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 weak for the US yen. And now we're going to go next. So if we go to our TradingView platform, if you're using TradingView, all you need to do, since we're already highlighted here in our watch list, you can just hit the down arrow and it goes down to the next asset. So it helps us do this a little bit quicker. So we can see that we've got, tell you what I'm going to do. I'm going to actually turn off crosshair synchronization. That might be a little confusing to some folks, and just so we can help follow my mouse. And so starting with the US CAD, we've got weak, 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 weak. All 6 prices on all 6 time frames are below the 200 moving average. All right. So we're going to do weak, 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 weak. All right. Now the US Swiss. Where are we on the US Swiss? Strong, weak, 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 weak. All right. So now we got strong, weak, 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 weak. And so we just go down the entire spreadsheet, entering all the data in the beige columns. And when we're done with that, it tells us the score of each of these products relative to each other. And that score is taken from here. So the USD on the 5-minute scored a 5. So here we have on the 5-minute chart, the USD scored a 5, and that's where that goes. And then down here, it just sorts it and shows us where our pairs are. So the USD on the 5-minute scored a 5, and there we are. So if we pair the USD on the 5-minute chart with the Swiss, the Euro, and the Zealand, we're going to see that the USD is going to be the stronger pair. We're going to want to go long. So right over here, we have the pound, sorry, not the pound New Zealand. We've got the Euro USD. So the Euro USD, since the Euro is the base pair, the Euro is going to be weaker, so the Euro is going to be short. The USD Swiss, so here we have USD CHF. The USD is the scored a 5 and the Swiss scored a 2, so we're going to go long. And here the USD New Zealand, the New Zealand is the weaker pair, but you've got New Zealand USD as the tradable Forex pair. We're going to go short because the New Zealand is weaker than the US dollar right there. So once we enter these within 5 minutes, we now have 9 trading opportunities on every time frame. So we can go through these 9 assets on the 5-minute, these 9 assets on the 15-minute, these 9 assets on the 1 hour, these 9 assets on the 4 hour, and find trading opportunities on each one of those. So let's walk through, say, the 15-minute time frame, right? That's the time frame that I like to trade. So we're going to track and see how well or how poorly these assets performed based on their relative strength numbers. And again, we concern ourselves with relative strength looking at the 200 period moving average on each of those time frames. So let's go ahead and go to a tradable window. Okay. Now I'm going to show this system finding trading opportunities, not only to just look at the chart, but also integrating our Sabre indicator. And the Sabre indicator is unique to the Sabre trading group. So if you want more information about how to join our trading group, I'll leave some information in the description on that. But this basically helps us find the most highest probability levels of supply and demand where we are. Because of course, when you see an explosive move in price, it doesn't always mean it's a quality move in price. Right? So that's where Sabre helps us find these opportunities by highlighting these opportunities with a green dot, whether you're going to go long and you're looking for an opportunity to go long, or a green dot to go short, looking for an opportunity to go short. All right. So when we look at our spreadsheet, the first opportunity that came up in the 15-minute time frame is the Aussie New Zealand. So let's confirm that we're in the 15-minute time frame, and yes, we are. And we're going to go to the Aussie New Zealand, and this is the chart that we were presented with. And these numbers I picked up from early in the morning on the session on December 31st. Okay, so this was the last trading day of the year. So here we have the last trading day of the year, right? You think it's going to be slow, right? Oh, there's probably not going to be a lot of opportunities to trade the market. It's New Year's Eve, man. You know, give it a break. No one's trading, right? Okay, well, let's test that theory. Let's see how well or how poorly this relative strength meter will treat us on New Year's Eve. So how are we going to bring in the new year? Okay, so we're going to go look for the Aussie New Zealand. Okay, now if we go to where we were, say early in the morning, say I got this information here at 9 a.m. At 9 a.m., let's go ahead and use the replay function. We'll have a little fun. At 9 a.m., we're looking for opportunities to go long. Okay, so here we have an opportunity to go long, highlighted by our Sabre indicator, a nice explosive move in demand, and it meets all of our rules. And I won't go into the rules on how Sabre works, because that's a whole another lesson, an hour and a half lesson on how to learn our trading system and find high opportunity trades. But as we go along, we see, an opportunity to trade just presented itself. So we have here a Sabre level, and actually earlier I said green dot, could be green or orange, and there's parameters for that as well. But here we have an explosive move in price where it was kind of doodling around over here. And we're going to draw our trade opportunity here, finding our level of supply and demand, and we're going to want to go long, because that's what our spreadsheet told us. It said there's on the 15-minute chart, there's an opportunity to go long on the Aussie New Zealand. So if I plugged in all these numbers first thing in the morning, say 9 o'clock, at 9:30, we now have a signal to go long. And so if we went long here, what would happen? We enter the trade, and the trade actually works, and it works quite well. Boom. Here we have a 5.7 trading opportunity here. So where would we want to potentially get out of this trade? You know, if we saw this explosive move, let's do our stop following impulses. And that's just one of the ways I like doing technical trailing stops, okay? So in this case, we got stopped out. So we got stopped out with a profit of 3.68, all right? So we're going to track this. Let's actually open up another spreadsheet and have one pre-prepared over here. And I'm going to say that on that Aussie New Zealand long, we made 3.68 profit. All right. So if we started with $1,000 right there, we made $37. All right. If we were going to risk 1% of our account, and if you follow our trade like a pirate methodology, one of the ways we protect our treasure is we never risk more than 1% of our account. Okay. So if you had $10,000 and you risked 1%, and we made 3.6 R on our trade, we made $368. Okay. So the next opportunity we have is the Aussie Swiss. All right, so we're going to look at the Aussie Swiss, AUDCHF. All right, so here, let's go back in the morning and let's find out where our 9 a.m. candle is. All right, so 9 a.m. we have this presented to us, and so our spreadsheet just tells us to look for long opportunities on the Aussie Swiss. All right, now here we had a long opportunity. All right, and it was an explosive move out in price, and it was signaled with all the parameters that we have in our Sabre highlighter or Sabre indicator to go long. And so price hasn't come into the zone yet. And so if we keep on stepping forward, here we have, all right, a signal, 9:15 in the morning. We have another Sabre level that presented itself. So if we go ahead and map out that trade, let's just assume we could make 3-to-1 on that trade. So we're going to map that out. And also with Sabre, you can have alerts. So you can actually tell Sabre to send you an alert when this happens. So if you wanted to add an alert, you can just click on that. And we can't do it in replay mode. But you would be able to say, okay, well, as soon as a Sabre level gets formed, shoot me a text message. As soon as a Sabre level is formed, shoot me an email or play a sound on my computer. So you don't have to sit in front of your computer. You just have to be, keeping an eye on this every now and then, keeping an eye out for these alerts. And so now we're going to step forward, and we see, another saber level got formed. All right. And one of our rules is that we need to say, well, if this is now the new level, I need to cancel out my old level. So we'll basically move our trading opportunity to the new saber level. Okay. So now what happens? Let's continue to step on through. And we're waiting. And, sorry. We didn't wait. Let me go back a little bit. Price kept on going. And we have a new saber level. And so I'm going to move our opportunity from this saber level to that one. All right. And there you go. And we'll continue to step through and up. Okay, we're in the trade. And so we would have been in the trade at 10:45 in the morning. And we would have gotten out for our 3-to-1. Oops, let's see. Would we have gotten out for 3-to-1? Nope, this one. We actually got stopped out. All right. So, well, maybe not. No, we're not stopped out yet. So where are we going? It's the end of the day. Okay, so this is where we were at the end of the day on New Year's Eve. So this trade would have stopped out. And let's go ahead and call it a loss because we did have price enter down to that zone. Okay, so the Aussie Swiss closed for a loss. All right, so we would have lost 1 R. All right, so we're still up 2.6 R for the day. All right, so what's our third opportunity? The 15-minute chart, the third opportunity was the CAD Swiss. All right, so here we have the CAD Swiss, C-A-D, C-H-F. All right, and let's go ahead and get ourselves into, 9 a.m. Okay, so 9 a.m., let's see. Well, just eyeballing this, the CAD Swiss never had an opportunity. All right, so if we were to get in this level, made itself known at 9:45, and price never retraced, and this level formed at 9:45. I'm sorry, at 1300, at 1 p.m. Price never came back into our zone. Okay, and here we had price another saber level, and price didn't retrace into the zone. So there was a great opportunity. I mean, it was saying you want to go long on the CAD Swiss on the 15. But there was no opportunity, at least in our trading system, to take advantage of. All right. So for the CAD Swiss, it's just a net zero for the day. All right. The next one, Euro Aussie. It says we want to go short. So let's look at the Euro Aussie. E-U-R-A-U-D. E-U-R-A-U-D. All right. So in this example, we have. Let's go back to 9 in the morning. All right. So here's 9 a.m. And here we would have gotten a signal at 9:15 in the morning. There's a level to go short, an opportunity to go short. So what happens if we set up a shorting opportunity following our trading system? All right, we're going to shoot for 3-to-1 by default. And we're going to move forward. And we see price up. Price does retrace back into our shorting opportunity. And a couple hours later, let's see, at 14:45, so we entered at 12:45, and 2 hours later at 14:45, we got out with our 3R profit. Awesome. All right, so now we're 3 over there. So what's our next opportunity? It says the Euro Pound has a shorting opportunity on the 15-minute. So let's go to the Euro Pound. So let's look at 9 a.m. 9 a.m. And let's see. Shorting opportunities. We're looking for opportunities to go short. Here's an opportunity that popped up. And price had not retraced. We're looking for a shorting opportunity. There's a shorting opportunity. And price did not retrace. Okay, so we did not get any opportunities to enter this trade. And this is one of the things about trading like a pirate. We don't chase trades. We don't chase after money. We need to see high quality, high profit, high probability zones. All right, so no zones presented themselves on the euro pound. The next one is the euro CAD. All right, so we're going to go ahead into the euro CAD, and we're going to see that, well, we can just eyeball this. Yeah, right here. So let's go ahead and delete that. And let's go to 9 a.m. And we see that in this case, 9:30 in the morning, we have a shorting opportunity. And let's go ahead and set our target to 3-to-1, which is our pirate rule. And we zing on through, and there's another opportunity that formed. So we need to move our target, change where our cannons are aimed against our booty, against our prize. And it's still, let's move that back to 3-to-1 R. Okay. And price does retrace, all right, so we would have entered at 12.15. And we would have exited our 3-to-1 trade right there at 14.45. All right. So we're going to get 3R on the euro CAD. All right. Next one, we're looking for a long opportunity on the pound New Zealand, GBP and ZD. All right. So we have an opportunity here. Let's see, where's 9 a.m. To our replay bar. And we're looking for a long pound New Zealand. Yep, pound New Zealand. We're looking for a long opportunity. So we're looking for a dot with a 3 higher high. All right, that's a short. And that's a long. All right, so if we got this alert and we were told to go long, let's go ahead and draw in our zone. All right, so here's our base. We have 3 basing candles in our saber system. They're the ones with the blue dot there. And so we have entered the trade 30 minutes after the signal. So we've gotten the signal here at 14:45, 2:45 in the afternoon, Eastern Time. And sometime within this candle, the 14:45 candle, we'd be in the trade. And do we make 3-to-1? All right. So that's our set and forget zone. Okay. So the day ended New Year's Eve, 16:45, 4:45 to 5 p.m. Eastern Time. So the market closed, and we would have gotten out of that trade. My rule is always exit the trade before the markets close on Friday. Right? So this trade would have been a winner, but not 3-to-1. So this one would have gotten us 1.28. Interesting. Christmas Eve, 1.28 on the pound New Zealand. And the next opportunity was the pound Swiss. And so it says to go long. So pound Swiss, we see an opportunity to go long. So starting at 9 in the morning, let's go to 9 a.m. where we created our chart, and we're going to look to go long. Let's see. We're going to look to go long. Okay, we have a 3 higher high, and you can't see it there. It's kind of mixed up under the 3 lower low there. Maybe if I make it a little bit bigger, you can kind of see the dot behind here. But this is the signal saying, look, 3 candles back in our saber system. And we're looking to go long on our level. All right, so that's our level of demand in our supply and demand based trading system. We're going to look at 3R. I'm actually going to target, instead of just doing a generic 3R, I'm going to target the opposing zone of supply. All right, so it's a little over 3.5 R. So we're going to zing on through and see where this trade takes us. Okay, we have a new level of saber, so we're going to go ahead and move up there. New level of demand, 3 basing candles, and so we're going to choose that zone and make sure, yep, we're at 3R. Okay, so where do we go from here? Oh, we go way up there. Okay, we're looking for it to either retrace or form a new level. All right, we formed a new level, and this is 4 basing candles. All right, so we're going to choose the top of the wick and the bottom, sorry, the top of the base and bottom of the wick. And we still want to target 3-to-1, 3R minimum in our trade like a pirate system. All right, we entered the trade, but again, right at the end of the trading day. All right, so this would have been considered a scalp. All right, so not exactly fair, but you'd have entered the trade and say, darn it, I got to get out of this trade. So we made a quick 0.4R before the market closed. All right, so 0.4. So if the market was still open, we'd have had more of an opportunity to make a little bit more money. Then finally, the New Zealand Cad tells us to go short. So the New Zealand Cad tells us to go short. So let's go ahead and simulate what it would be like at 9 in the morning. So at 9 in the morning, we see, oh, we have a nice little saver level. So let's go ahead and map that out. Nice level of supply to go short on in our supply and demand trading methodology. And I don't actually like this level because it's in what we call shark-infested waters. So if we were trading using the saver system, I wouldn't take this trade. But let's see what happens, because again, I'm here to show you how the Forex StrengthFinder works. Okay, so now we have a new level, which gets me out of the old level that I wasn't happy with. And let's see, out of these four, no, actually this is one candle, because we had 3 basing candles, a leg candle, and 1 more base. Okay, so it's just this one candle that we are looking to take the trade on. All right, I'm going to go ahead and include that. And we want to estimate our 3-to-1 reward to risk ratio. Okay, so what happens here? All right, we have another short. All right, we have another shorting opportunity to pop up here. All right, so that's our short, 3 lower lows. All right, so I'm going to move my trading opportunity here. And again, it's just one candle in the base. We had a base and a leg and a base and a leg. So we had a drop, base, drop in this formation. So we're going to take the entire candle. And so we're down here. So although price did retrace, we're currently down here at the end of that closing candle. Let's move ourselves up to 3R. All right. And in our very next candle, boom, we tapped into that. So we tapped right into that price zone right there and got entered right in that next candle. As soon as the alert hit us, and whether you get a text alert, an email alert, or a pop-up on your computer, boom, we got right into that trade. And then what happened? Boom! No one plays games with New Zealand, man. You know, of course, you go there, they got all kinds of animals that'll kill you, just like in Australia. And boom, they don't play. And we had the trade work out just perfectly. All right, and that was the end of our trading day there. And it was also the end of our opportunities. We just went through 9 trades, okay, on Christmas Eve. Let's say we took 3R on that last trade. 9 trades on Christmas Eve, and we had a 13R day. All right, we had $1,400 in profit on a $10,000 account, risking no more than 1% per trade. And if we were risking 1% to make 3 on every trade at a minimum, and this is our minimum reward to risk ratio, we want to risk 1% to make 3 or more if you're going to use a technical trailing stop. So we'd have made 3.6, lost 1, no opportunity to get in, made 3, no opportunity to get in, made 3, made 1.2, made 0.4. Those closed at the end of the trading day. We couldn't ride those all the way to 3.1 or 3R, and then an R. So what's the hit rate on that thing? I mean, we had 9 trades and we made winners on all but 1. All right, so we didn't get into 2, so that's 7. That's 7 trades, and so we got 6 out of 7 trades. That's an 85% hit rate. That doesn't suck, as they like to say back in New York. All right, and so what was I trying to do over here? I don't know what I was trying to do over here. I had a formula. Probably trying to calculate the percentage return. So equals this divided by your start. No, that didn't work. Yes, it did. Got to change that to a percent. So we had a 14% return for the day. Imagine if every day you got a 14% return on your trading account. That would totally revolutionize your trading, wouldn't it? All right. So again, this is just one day's example, and it happened to be on what assumedly is one of the slowest days of the year, New Year's Eve. I mean, everyone's getting ready to party, right? And so what we did was we found actual levels of supply and demand in a market where we are comparing high probability trades of matching up strong pairs of currencies against weak pairs of currencies. And we're only going to take those high probability, low risk, high profit trades. And the question is, where are the opportunities? Where do I go looking? And what this spreadsheet helps us do is find those high probability longs and shorts on each of the different time frames. So if you're a scalper, if you're a day trader, if you're a swing trader, if you're a portfolio trader, I mean, you can do this on your portfolio. Every Monday, go look at the daily charts. Or if you're really lazy, every quarter, go look at the weekly charts and find levels of supply and demand, whether you're using Sabre or whether you're using some other methodology to find out where those remaining orders are. And that's our job as supply and demand traders, is to find out what institutions did, and we want to find out where those massive piles of buy and sell orders are, and then follow in their footsteps, where we can say, I betcha there's more orders there that the institutions sold. Or we could look at another one and say, this is where I thought that institutions, looking for one of the longs, nope, anyway, and where the institutions bought. And that's our job as supply and demand traders, is find out where institutions bought, in this case, right there, and what are the probabilities that they're going to buy it again, where we can then target opposite zones of profit. All right? So whenever someone's trying to figure out what should I trade, where should I trade, what time frame should I trade, this spreadsheet really, really helps. And it helps you target your emotions and target those high probability opportunities and stay away from anything that does not have the odds working on its favor. You know, these guys here in the middle, this is where my friend says, don't be playing in the dirt. You know, these guys are just futzing around. They're kind of in the middle. They're not weaklings, but they're not strong. You don't want to hang out with these guys. You want to hang out with the jocks, and you want to be winning against all the weaklings. You know, you want to be going short. If you're going to be betting against the weaklings, you're going to be betting against the weaklings against the jocks, all right, no matter what time frame it is. So I hope that helped. I hope this encourages you to look at some bigger picture analysis in your trading and not just trade haphazardly or randomly. When it comes to trading, successful trading involves having a system, having the probabilities or the odds or your edge in your favor, and taking every trade that comes your way. You know, so when you find high opportunity, low risk, high profit trades, there's no such thing as over trading. There's no such thing as under trading. There's no such thing as revenge trading. We're just looking for the high probability, low risk, high profit trades. And then we just trade every single opportunity that comes our way, because you know what? At the end of the day, we're not going to win them all, but we're going to win enough of them to where our winners are going to totally overtake our losers. I hope that helped. Everybody, trade well, trade safe, and if anything, I hope to see you in the Sabre trading groups where we can help you trade like a pirate and take home as much treasure as you would like to week after week. Take care. And please leave a comment, like and subscribe. If you like this information, please share it with others. We're here to make everybody more successful and more profitable, and we ask you to do the same. Trade well, trade safe, and may 2021 be an awesome new year.